So in 2025, India made a financial move that, well, it left a lot of analysts scratching their heads. They sold off over $50 billion in U.S. government debt. Now, okay, that happens. But here's the really weird part. They did this while U.S. bond yields were consistently paying out over 4%. For a central bank, that's almost like turning down free money. So what on earth was really going on?
See, this wasn't about chasing higher returns somewhere else. Not at all. It was a fundamental change in strategy. India wasn't just picking a different investment. It was choosing a completely different kind of safety.
You're watching Voice on Pages, and this is where economics meets reality. Over the next few minutes, we're going to break down exactly what happened, why it happened, and what this move really signals about where global finance is headed.
All right, first things first, we have got to cut through all those sensational headlines. You probably saw words like dumped and ditched being thrown around, but the reality, it was way more calculated than that.
This wasn't some sudden fire sale. No way. The $50.7 billion reduction, it happened methodically, spread out over an entire year. This was a slow, deliberate rebalancing of a massive portfolio, not some panicked rush for the exits.
So, here's the crucial point. We are not looking at a panic. What we're looking at is portfolio engineering. It was a conscious, strategic decision to reallocate assets, not some knee-jerk reaction to the latest market news.
And this, right here, is the central mystery of the whole thing. India was reducing its holdings at the exact same time U.S. Treasury yields were in a really attractive 4 to 4.8% range. For a conservative investor like a central bank, those are solid, safe returns. Selling at a time like this, it goes completely against the typical playbook.
Which leads us to the real question driving this entire story. If India wasn't selling for financial reasons, what other reason could possibly be powerful enough to make them walk away from billions in potential returns?
And the answer, well, it starts to get a lot clearer when we follow the money. Because that capital didn't just disappear into thin air. It was redeployed with incredible precision into one of the world's oldest and most tangible assets.
The numbers here tell a really clear story. As U.S. Treasury holdings went down by over $50 billion, India's physical gold holdings went up. It's an almost perfect inverse relationship. This wasn't a retreat from the market, it was a strategic rotation into a whole different class of asset. And the impact of this was huge. Gold went from making up less than 10% of India's foreign exchange reserves, their big rainy day fund of foreign currencies, to almost 14% in just 1 year. That is a massive strategic shift. It tells you that gold is no longer just a diversifier for them, it's now a core pillar of their financial safety net.
But wait, here's the real kicker. India didn't just buy more gold on paper. It physically brought about 64 tons of its gold reserves home from vaults overseas. This is such a powerful move. It's all about reclaiming sovereign control. It's one thing to own an asset. It's another thing entirely to have it physically within your borders, beyond anyone else's reach.
This brings up a really fascinating question, right? Is this just smart, prudent financial planning for a crazy, volatile world? Or is it a quiet but unmistakable declaration of economic independence? I would love to know what you think, so please drop a comment below.
So, what could possibly trigger such a profound shift? It wasn't a market crash. It wasn't an economic downturn. It was a single geopolitical event that sent a shockwave through every central bank on the planet.
Back in 2022, the U.S. and its allies froze over $300 billion of Russia's foreign currency reserves. Now, regardless of the politics, the technical message that sent was a thunderclap. It proved that a country's access to its own dollar reserves could be switched off, just like a light switch.
For countries like India, which value their strategic independence above almost everything else, the takeaway was stark. It was unavoidable. The safety of dollar-based assets was no longer an absolute guarantee. It was conditional on geopolitics.
Now, let's be absolutely crystal clear on this point. This move does not mean India is anti-dollar. The country still holds nearly $200 billion in U.S. debt. What it is against is having a single point of failure in its national security. This is about building resilience, not about rejection.
And that brings us to the bigger picture here. Because India is not an outlier. It is actually a leading example of a new playbook that's being adopted by emerging economies all across the globe.
Just look at the pattern. Over that same period, China and Brazil made even larger reductions in their U.S. Treasury holdings. And while all of this is happening, central banks globally are on an absolute gold buying spree, snapping it up at rates we haven't seen in decades. This isn't a coincidence, folks. It's a trend, and it's driven by a shared set of incentives.
So if countries like India, China, and Brazil are selling, who's buying? Well, the demand is being picked up, don't worry. A big chunk is being absorbed by domestic buyers right in the US, think pension funds and insurance companies. And key allies like Japan have actually been increasing their holdings, which helps stabilize the market. The buyers are changing, for sure, but the market is still clearing.
And this right here is probably the most important distinction we can make. We are not witnessing de-dollarization. That would be a total abandonment of the dollar. What we are seeing is de-risking. It's a strategic shift to reduce over-reliance on any single currency, any single country, or any single system. Plain and simple, it's about having options.
Which leaves us with one final and I think crucial question. Is India's move really a bet against the United States, or is it a hedge against something much bigger, maybe more unsettling, a world where the fundamental trust in our global financial systems is beginning to fray?
That's the strategic reality behind the headlines. If you found this breakdown valuable, make sure you subscribe to Voice on Pages for more deep dives into the stories shaping our world. We're fueled by curiosity and, well, coffee. So if you enjoy our work and want to support the channel, you can find a link to buy us one in the description below. Thanks for watching.